And joining us from Princeton, New Jersey, Bob Dahl, Vice Chairman and Chief Equity Strategist at BlackRock, which is the world's biggest money manager. And Bob helps oversee more than $3 trillion in assets. Bob, always good to have you with us. You told us earlier this year that investors need to strap in and get ready for that wild, wild ride on the market. So what do you think at this point? Will stocks still end the year higher here?
I think they will. As you know, we're not far from the zero line, flirting with it either side of it over the last few weeks a couple of times. Obviously, as you just reported, the recent news has been on the weak side, largely due to jobs. That's coming off, of course, a roughly 10% rally in stocks from that early July low, and we've given back a little less than half of it in this recent few days.
Yeah, and Bob, you mentioned before that the jobs market is very important. You're looking for some sort of improvement here in the numbers. But what about the surprise increase in jobless claims last week, a highest in 5 months? Can you believe that?
Yeah, that was certainly a disappointment. You never, on the weekly numbers or the monthly numbers, look at just one. You've got to look at a moving average. And while the moving average is not great news, it's a little better than the most recent ones. My view is that we will see, because of improved productivity and increased hours worked, we'll see some more jobs. Not enough to substantially bring the unemployment rate, but enough to add some jobs and therefore a little consumption and income to the economy, keeping this slow but noticeable upturn in economic recovery alive.
Okay, now, Bob, with your 10 predictions for the next 10 years, you said U.S. equities will experience maybe 8% average growth per year over the next 10 years. What about for 2010? How do you think at the end of this year we're going to turn out here?
Well, I still think if we can get the word double dip out of our vocabulary, we still have a chance for a decent second half. The fact that we've never had a double dip before here in the United States, and I'm not sure why this should be the first time. We're still getting modestly positive good news. I think for every 3 statistics, you're going to get kind of 2 decent ones and 1 not so good. So we're muddling through. So I think we'll be higher. Whether we get to a double-digit percentage gain each passing day makes that a little taller order, but I don't think it's out of the question, Susan.
Okay, have you looked at Treasuries lately, Bob? I mean, people are running for safety right now with those yields coming down to record lows here. Now, even though you said that we have equities outperforming cash and Treasuries over the next 10 years, what about this flight to safety? I mean, this is a bit scary for a lot of investors looking at the yield curve right now.
No question. I think the yield curve is talking about a weak economy, talking about the deflation threat, certainly the absence of inflation. And you're right. It's the herd mentality has gone there. So far, they've been right. We'll see how long that lasts. I don't think we'll have inflation anytime soon. But I do think if we can avoid the double dip, that we'll trade back down in price and up in yield, some in Treasuries, but not necessarily today or tomorrow, but over the next few months.
Okay, but let's talk about the sector choices that you've made in these 10 predictions over the next 10 years. You still like healthcare. You know, we have a lot of evolution in this space, information technology and energy alternatives. Maybe you can tell the viewers why exactly these 3 sectors are the ones to be placing your money in over the next decade.
Certainly, we think the advances in healthcare will continue. An aging population in the developed world, all of that in our minds augurs for more money being spent on healthcare. With or without government help or hindrance, if you will. So we think that's an area ripe for gains. Technology. Over the next decade, we think there will be advances in lots of different parts of the technology sector, and emerging markets will continue to buy some of the existing technology, and that will help a lot of these companies. Finally, alternative energy. We think that as the price of fossil fuels continues to move up, these other energy sources will be looked to with favor.
Yeah, I got excited when you talked about emerging markets there, Bob, because, we have some doubts about the Chinese recovery as well, especially with slower industrial production figures and a lot of other economic numbers that we got this week. What do you think about China? Is it going to hold up in order to maybe still lead the global economic recovery?
Well, the question I was just answering was about the next decade, but you're absolutely right. In the near term, there are some bumps along the way. We think that the Chinese economy will continue to be okay. Less robust than it was. As you know, it was growing, let's call it 12% real, and we're going to have to debate what it's going to slow down to. Our guess is still 7 or 8 rather than lower than that, and that's good enough to keep global growth that rides on the back of China reasonably robust.
Okay, and Bob, when you say you're focusing in on opportunities in emerging markets, where exactly are they?
Well, they are in those three sectors I just mentioned. We think that the emerging markets will continue to buy more technology, will help along the alternative energy and create the rise in fossil fuel prices, conventional energy, to make those alternatives more interesting. So they are the plays that the emerging markets will help us with.
Okay, and quickly, let me just ask you about the dollar. Have you seen the strength in the U.S. currency these days? But you think it might be diminished over the next decade as well?
Yeah, we think the dollar will continue to hang in there relative to the rest of the developed world currencies, obviously the euro and the yen. I think the real question is how weak will the euro, the yen, and the dollar be against emerging market currencies? And our view is with stronger growth, the absence of debt problems, that the emerging market block of currencies will outperform those developed ones over the next decade.
Okay, Bob, we covered a lot of ground. Thanks again for your time and have a great
Thank
weekend.
you.
Bob Dahl, Vice
too.
Chairman and Chief Equity Strategist at BlackRock.